Good afternoon, everyone. Hope everyone had a fantastic Friday session. End of the week. SPY closes up 1.38%. The NASDAQ also closes up about 1.5% on the week. The Dow, the DIA ETF, closes up 1.66%, making new all-time highs along with the SPY. The Qs, yeah, even though they're up 1.5% on the week and making some interesting moves, but semiconductors mainly lagging behind. The Qs are still down about 4% off of its all-time highs. Leading this week, surprisingly, well, actually not surprisingly, considering the interest rate decision from the Fed, interest rate sensitive names such as small caps led things up over 2%. But still just shy, about 6% shy off of its all-time highs. Looking here at the economic data this week, we can see that we started things off just as a review and recap of this week with the economic data. We had the Empire State Manufacturing Index, which came in much better than expected at 11.5. We had stronger than expected retail sales, which kind of set the stage up for a move higher. And then, of course, on Wednesday, we got our FOMC statement. We got the new projections and dot plot. We also got our rate decision, which came in at 50 basis point rate cut, which was larger than mostly what was anticipated. Now, the overall market was kind of split on how things were going to go, whether we were going to get 25 or whether we were going to get 50. We did, in fact, get 50 basis point. In fact, I think the only major bank to, suggest that 50 basis points should be made was JP Morgan. I think there was two other banks, but the big one there was definitely JP Morgan. Citibank, Bank of America, all those guys were thinking 25. I myself, too, leader of the club, even was thinking more so on the 25 basis points and just do a gradual cut, and we'll get into that in a little bit some more. But yeah, we got our 50 basis point. We got our statement from Powell, which, these notes were posted for you in my channel. You can review that, or you can just pause this video and just kind of take a look at it. But it does seem that the Fed and Powell are pretty confident that the economy remains pretty darn strong, and that their main goal is, now keeping it that way, especially as far as the employment rate goes and keeping a strong labor market. They do believe that the overall inflation is going to continue to decline towards that 2%. But yeah, one thing that, kind of, resonated with me as far as the Fed goes was, they're going to be paying attention to the PCE, and they're also going to be paying attention to the housing data, which, is more affected by other entities within the federal government to, help alleviate some of the stress conditions within the housing market. Although, a declining rate from the Fed could possibly help. It just makes the cost of borrowing cheaper, of course, but we'll have to wait and see how long it could take for that to happen, to trickle on down, of course. But the housing is, we got to have a better supply of housing markets, and just, better policy making from other aspects of the federal government. So, that's interesting. It's kind of outside of the Federal Reserve's hands as far as that goes. But, one thing to keep an eye on, of course. And then, of course, they did see that the unemployment rate, is still historically low. We looked at a few graphs the other day in my other video, if you want to check that out. But yeah, 4% is still historically low. It's still pretty strong. Even if we get into the 5 or 6%, that's still historically low as far as the entire economy goes. And they do see that the unemployment rate could rise to about 4.4% by the end of year versus 4.0%, which is what they had in the June meeting. So we are going to be paying attention to all the unemployment claims, the unemployment rate as they come in. But yeah, overall, labor market is very strong, and that they see that 2.3 PCE by the end of 2024, and then finally gradually going down to about 2% by 2026. So even though the inflation game isn't quite a victory battle just yet, it is definitely coming down pretty handily there, as we have seen. But yeah, we did get a dissent mainly from Michelle Bowman, which I will pull up here. She got to speak her mind a little bit today, and her case was that they have not reached the inflation goal and that it was too early to declare victory. She says that I see the risk that inflation committee's larger policy action could be interpreted as a premature declaration of victory on our price stability mandate. So yeah, she's coming in with some pretty stern words, and curious to see what you think and all that. But we also had a follow-up by Fed Governor Christopher Waller, who had a different take on it, who said that we are at a point where the economy is strong, inflation is coming down, and we want to keep it that way. So just kind of resonating what Jay Powell had to say within his Q&A session yesterday to the press and all that kind of good stuff. So Waller definitely emphasized that the September's cut wasn't because, I like how they use the word jumbo cut, it wasn't because that officials saw weakness, which a lot of, I've seen headlines and stuff like that they, you can take it either way, depending on what side of the fence you're in. Is the Fed really fearful and concerned about everything? Or, are they, just that confident that inflation is cooling down and they want to stay ahead of it and cut rates aggressively? And even so, we're expecting 25 basis points rate cut in November, which is in 48 days, and then another cut for the December meeting going into 2025. So another 50 basis cuts is on the table going into next year. So this, are they that confident? And are they truly trying to stay ahead of everything with the jobs market and the labor? But yeah, he cited that the rebound of inflation in early 2024, which we did see, kind of caught them off guard just a little bit, and that pushed them back, push the rate cuts back further to September, and just trying to be patient. And plus, we also had that Japan carryover trade scare not too long ago, which has definitely been brushed to the side at this point with a pretty big recovery. So they also decided probably not to cut rates at that time or hold an emergency meeting, all that stuff. But yeah, he continues to say that I do not believe that we are behind. We're doing exactly what we thought we would do at the beginning of the year. It just took a little bit longer just because of the first quarter, when things started to, you got a little bit more of a bump there. So yeah, and even still, the markets are, trying to be a little bit more aggressive. Maybe we'll get 50 basis points. Maybe we'll get 75. Who knows? We still need to continue to see the data. But yeah, all in all, as a weekly review, all indices up. It was an interesting week on my end. Slow start, it just seemed like I couldn't get anything to click, just nothing really happening. And finally Tuesday, I just pretty much shut it down. It was like I just had to walk away, and then I came back in later that afternoon and just pretty much kind of shut myself into the office and kind of like just sat down and focused and took notes and gathered myself up. And Wednesday, of course, was FOMC. I personally didn't trade FOMC day. And I just watched the price action unfold. We got that nice little push higher, and things very volatile, of course, came back in. We had this nasty bearish close. And then Thursday, of course, we get that nice gap up. Futures were incredible that evening. And then that day, I went 3 for 3, took Netflix from 4.8 to $9.60. Fantastic 100% move on that. Also took ZOM as a day trade, and I took, what was the other one? Palantir, I think it was. Yeah, it was Palantir I took for 50%. So, and then my futures account, of course, were all green. So that was pretty good. And then coming in today, batted pretty well. Took Q puts from $1.58 all the way up to $2, and then I got back in at $1.50 and took it back up to $2 and then to 60. Yeah, I mean, we got 100% on that. And yeah, you know, Netflix was definitely the standout trade. I did take a new position going into Netflix. I'm watching this daily squeeze position setting up here on the daily. We have good positive structure, the 21 EMAs over the 50, the 50s over the 200. So good structure. Everything looks pretty good here. Just need to see, or just want to see this daily squeeze fire to the long side and take out this week swing high at 715. I did a 10 wide. We know Netflix can move, but yeah, that's the new position mainly. I'm not going to get into any nitty gritty today on what I'm going to be looking for next week. I still have to run my scans and all that. Today's video is just kind of a review and kind of see where things closing up. But yeah, if we look here at the SPY, we can see we did break into new all-time highs, gapping up, and then we gapped down today, which is, you know, creates this interesting, you know, is this an evening star, abandoned baby kind of doji candle with the gap down today? Who knows? We don't really have it confirmed at all by any means. But structurally speaking, everything looks pretty bullish to me. Like I said, the Qs, they're still off from their all-time highs. Still got plenty of work to do, especially with like the semiconductors. We can't seem to break above this like 485, 488 zone. So just something to keep an eye on in general. Let's see, the Dow, of course, made new lifetime highs this week. You had a little bit of some woes there, some headaches with FedEx earnings. FedEx earnings came out today, and as you can see, you had this big gap down today and closed at the lows, so pretty tough spot there. UPS also followed suit there with FedEx, and yeah, you know, so we'll see. It's kind of interesting, especially since we're getting into the holiday season with these, and you know, who knows as we go into Q4 and all that kind of good stuff. But yeah, markets overall positive reaction to the 50 basis point reaction. We'll see if this bullish move and momentum can continue to go through next week. If we look at the weekly chart here, we can see the weekly charts continue to look pretty bullish. We did get a dark blue momentum bar here on the weekly, but I would like to see two dark blue momentum bars to say, okay, maybe the things are kind of switching gears here. Kind of like what we had back here. This was during the Japan yen carryover trade scare, but even still, we came back down to the 21 EMA on the weekly. Overshot it because that gap down, but we reclaimed it quite quickly. So all in all, structure, momentum, everything looks pretty good here going into the next week. So that's going to be it for me, guys. Good week. Way to close the week. We bounced back pretty darn strong. I went from a red week to a very good green week, so I'm very thrilled about that. So I'll catch you guys on Sunday, where I'll be taking a look at what I'm watching going into the next week and what we can expect as far as, you know, the economic calendar and all that kind of good stuff. All right, guys, y'all take care. If you have any questions, feel free to reach out, send me a DM, at me in the chat, or, you know, message me down below in the comments, and I will get back to you. All right, guys, take care. Have a wonderful weekend. Have a good weekend.